got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the coattails of the...
Well, good afternoon. It is Friday, March 14th, 2025. This is the MrNotAdvice end of the week review and update. Obviously, this is for entertainment purposes only and is not to be construed as advice in any shape, form, or manner. Anyway, so looking at my screen, well, first of all, let's go over from Goldman's trading desk. They said nauseating weeks stuck in a macro-driven chop. Posturing still leans defensive, with feedback suggesting that the market is testing the pain point for policy and that the Trump put hasn't been removed from the market, just restruck lower. There are plenty of oversold conditions, though it feels like most of the acute damage is behind us. The market is lacking a clear catalyst, and there's built-up scar tissue there's built-up scar tissue as a result of a series of market fades. So I agree. The market, I think, is, we've had a really strong downtrend. Today was a rebound day. Some of that was driven, I think, by short covering as we go into the weekend. It was a light volume day today. And we did receive, there was news this morning that economic news that also should have pushed the market a little lower. But yeah, we had light volume, and for the week, small caps were the worst or were the least ugly, and the Dow Jones was the most ugly. In fact, the Dow theory is sending a bearish trend signal. And the Dow theory effectively says you've got to have, it's an old, I haven't heard this one in a long time, but any move in the Dow Jones Industrial Average must be confirmed by the transport stocks and vice versa. Well, guess what? The transport average broke and it's below 10%. So that should mean that there's future pain ahead for the rest of the overall market. Here's the problem. The Dow's only 30 stocks. So when you factor that in, and the Dow is not generally, the argument, not representative of the current economy in this country. So because you have a lot of the old, chemical companies and steel companies in there, steel company in there. And so just perhaps I mean, it's not something that I'm sitting here thinking that there's a high probability of. So looking forward, buybacks are heading into the blackout period with 43% of the SPX already on the sidelines. And then the window expected to be closed from March 17th to 4/25. So there is a huge seasonality. Well, it's only one data point, but looking at Trump tariffs 1.0 compared to now, this appears as to be the part of the price history, or the price history that the market should bounce. We although the market bounced again at the end of the day today, the market is still down significantly. When I look at the S&P 500, let's take a look at the daily charts here. On the S&P 500, yeah, we are still stuck in this range, which quite frankly, we've been in for the last 4 days, and we still haven't been able to break above the 50% retracement of Monday's candle yet. So no, I'm not super excited by that. In fact, I said 56.50 on the SPX was my go long level, and we are at 56.50. We're 56.38.94. So we're very close. On the NASDAQ market, it is also stuck in the same type of range, but I think for the NASDAQ, it's got to get over 20,000. In fact, if you look at all the major indexes, anything over, they're all at underneath big numbers. NASDAQ at 20,000, the SPX at right underneath 6,000, SPY underneath 600. So go long on SPY would be a close above 565. But any move higher, I mean, you really got to take into account here this 600 level that's sitting above here on the SPY. I do not think, from what I hear this point about tariffs, that there's enough momentum to get us up here. Now, one of the good things is because of the forced selling that's been going on this week, we do have CTAs I know are pretty much done selling with their program selling. So there is additional cash that's now been raised. And that was part of the problem with bounces, whereas there just wasn't any cash on the sidelines to be able to be put to work. So let's see here. Looking at a couple trades. Well, let's look at EOSE. EOSE is $4 seems to be the support level, or the level that they want to keep this price above. My holy crap, go short flip is 366. That was the original break level, by the way. If you go all the way back to October 16th, that was 366 high. This was a 366 touch low, and we got to break it. Otherwise, EOSE is going to move sideways. So right now, I think if we can break 421 to the top side, that would be an aggressive long. And quite frankly, it probably is going to be this purple line, by the way, on the charts is the S&P 500. There is some correlation going on to the upside with EOSE. It hasn't broken the correlation yet. ENVX today, you look at the percent amount and say, oh, what a great day, but not really. It's stuck. It was able to get right up to the 50% level of Wednesday's candle, but big whoop-de-doo. ENVX has a problem. If it does not hold today's low, or actually if it doesn't hold 724, which was Wednesday's low, the gap is going to close all the way down to the May 1st gap of 616. First stop would be $7, then 616. So I see nothing right now that would tell me why that stock won't continue to trend down. EOSE, I see nothing why the stock won't continue to trade sideways, primarily at this point. Looking at, we are in an NVIDIA trade. I'll be raising a stop on it to today's low. My target is 125, initial target. If we get another green day on Monday, I think I'll probably have a chance to scale out of this, maybe at plus 80. I got 2 more scales left. And so we've already scaled. I already scaled today for plus 30, I think. Other members scaled for plus 40. So that's a good trade. Looking at, we are also in WPM, wheat and precious metals. Wheat and precious metals looks fine. Gold broke out, was not able to close above the 3,000 level today. However, we did get the futures up there last night, I believe it was. So I think the gold trend, the gold is going to continue to move strongly upwards. Let's see, what else do we have? We've got WPM. Oh, Groupon. Sort of surprised, but really strong strength on Groupon. Looks like these were capitulation selling days down here. And these are like 6 and 7 standard deviation explosions of volume. But I am cognizant of this range of these candles is starting to tighten up, right? So I'm going to watch for a rollover here. I'm not going to be brave on this one. I'll adjust my stop to right below 15 or 1454 on it. What else do I have? I'm trying to get into Palantir, but I'll wait till we get up here, let the market do all the work. Same thing with Tesla. We haven't even broken out of the engulfing candle from Monday yet, so Tesla's not a buy yet. Ultimately, it's going to be dependent upon the market. I agree with what Goldman says, even though they suck. I agree that what's the catalyst going to be? And what are the chances that we go through this weekend and Trump says nothing? And so, again, we've fallen so hard and so much that even a retrace on the Qs from 479 up to 500, um, that would be normal in my mind. But to get back above 500 on the Qs and close back above there, I don't think that's going to happen. I think NVX is going to continue to drift down, barring any news. And I think EOSE at the very best is going to continue to drift sideways to down, barring any news. So unless we get a strong market with a lot more liquidity coming into the market, which we do not have now. Also take special note of the US dollar continues to weaken, which shouldn't be happening actually. With the market going up, you'd expect the dollar to go up. But I think a lot of that has to do with the global perception of Trump's policies and tariffs. And I think there is the general understanding that, for right now, because of the unknown, there's an expectation or the dollar is getting debased more and losing its value relative to world currencies because of that uncertainty. I think that will change, and I think the dollar will start to strengthen. So right now, it's actually serving a good purpose. If the market can go up and the dollar can go down, that helps America because deflating our currency makes all of our products cheaper overseas. And so even with the tariffs, we'll have to see April 2nd as the tariff drop dead date, when they put them into effect. And obviously, we're going to have news between now and then. We're also going to have to see, looks like we did avoid a budgetary shutdown or a government shutdown, unfortunately. So we're going to have to see now that the CR got passed, then they'll have the time, I think, until September to enact Trump's policy. So right now the table is set. The field is set for there to be, we get to see how much the Republicans are going to stand behind Trump and if the Democrats can coalesce together and stand up to any of the policies. So I think that the market's going to remain volatile, I think. And really the challenge is if you look at any of the charts, with the exception of this recent downtrend, the market doesn't like the trend. Even in the downtrend, look at these days, huge red down day, big green, huge red. I mean, this is not trending. This is not tradable. I can't tell you how many, I saw at least 3 financial gurus quit on Twitter, and one of them was $1 million account, supposedly, where they just blew themselves up. So protecting capital is not just a cute saying that I use. It is, my first rule of trading. If you don't have capital to stay in the game, to stay trading, well, you don't ever have a shot to, make money, let alone increase your trading skills. So anyway, I'm watching very closely the Qs. I'm watching some of the defensive sectors like the Costco's or the Staples and things like that. This was the first week that we had a couple trades. And I'm hoping that next week, even if we start trending for a week or two, just not these huge violent intraday moves or, next day moves where it completely undoes the entire range of the move previous days. We need to get out of that. So other than that, my view on what Trump's doing is, well, we're going to get to see now that there's only so much you can do through executive order, getting these things codified into law. And we still at the very front end of what's going on with Doge. So I had planned on doing a podcast with Greg, but he has been under the weather. I do have a podcast coming up hopefully next week with our very own Jakester, and we are going to debate Trump's policies, a friendly debate and outlook, what we think the market's going to do moving forward. So I hate to say this, EOS and ENVX, my view on it is those two companies are going to continue to drift down. I think that EOSC has a better chance of not drifting as much because it's got more connection, obviously, to the White House, as well as I think it's in a pretty sweet spot. And there should be more news. NFX, it's simple. Announce a customer with an order and the stock, it will be re-rated as a company that has completed and proved its entire business cycle. Until it does that, it's going to continue to trade as a pre-revenue stage company. It's getting away with, quite frankly, I think EOSE and ENVX share prices should be reversed. But look, if the EOSE breaks down below 261, I mean, I would love to be able to buy or below 361. I would love to be able to buy it at a great discount at 250. Sure, as long as nothing else has changed. So anyway, I hope you have a great weekend. This was somebody asked me, have you ever been through a period of trading like this? I'll say, this reminds me of 2008, just the headline driven, constant whippy back and forth, false hope. And then, I mean, it's just sort of like that right now. But nowhere near as damaging as 2008. We had days where the market was down 9-10%. I think we had a period where it was like 3 days in a row of that crap. So good job for those of you that were able to sit on their hands this week. And I look forward to see what the market brings us next week. Thank you very much.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the